A significantly weaker Confederation of British Industry (CBI) survey for May than expected. This reinforces the impression that manufacturing activity has lost appreciable momentum during 2018, and that the sector is currently operating at a lower level compared to the robust performance seen in the second half of 2017. While it was still at a level above long-term norms, the overall orders balance weakened in May to be at its lowest level since November 2016. Softer domestic demand was the main factor behind April's weakened orders. Export orders held up better but were nevertheless at the lowest level since last October. Both domestic and export orders are well off the peak levels seen in late 2017. Balance of manufacturers reporting a rise in output over the previous 3 months weakened to 3%, the lowest level since April 2016. A positive development saw manufacturers' output expectations for the next 3 months improve to an 8-month high in May, despite the weakened orders balance. The manufacturing sector faces challenging conditions at home, notably, still limited, albeit gradually improving, consumer purchasing power as well as business caution over investment amid significant uncertainties. This has been reinforced by recent increased prices for big-ticket consumer durable goods and capital goods. On the export front, it is evident that the help to the manufacturing sector coming from a competitive pound and robust global growth has waned. Sterling has firmed overall from its 2017 lows despite its recent softening, while economic activity has come off its highs in some overseas markets, notably the Eurozone, where GDP growth slowed to 0.4% quarter-on-quarter (QQ) in the first quarter of 2018 from 0.7% QQ in the fourth quarter of 2017. The May CBI Industrial Trends Survey will hardly inspire confidence at the Bank of England that the economy is bouncing back significantly in the second quarter after GDP growth of just 0.1% QQ in the first quarter. Consequently, the Bank of England looks highly unlikely to raise interest rates at the next MPC meeting in late June. Expectations of an August interest rate hike will also likely be diluted given that the MPC wants to see sustained evidence that the economy is improving before tightening monetary policy. Howard Archer, chief economic advisor to the A-Item Club, comments, the May CBI Industrial Trends Survey points to the manufacturing sector losing further momentum, thereby extending the weakened performance seen in 2018 compared to the robust performance in the second half of 2017. Specifically, the total orders balance declined to -3% in May, which was the lowest level since November 2016. It was down from 4% in both April and March, 10% in February, 14% in January and 17% in both December and November, which had been the highest reading since August 1988. While an 18-month low, May's reading of -3% is still substantially above the long-term average of -19%. Softer domestic demand was the main factor behind May's weakened orders, and it has come well off the peak levels seen in December. In November, the export orders balance only edged down to 8% from 9% in April. Nevertheless, this was a 7-month low and down from a peak of 20% in December, the highest since June 1995. It was still well above the long-term average of -19%. A positive development saw manufacturers' output expectations strengthening to an 8-month high in May despite weakened orders. Specifically, the balance expecting to raise output over the next 3 months climbed to 27% in May from 21% in April and 13% in March. On a less positive note, the balance of manufacturers reporting that their output was up over the past 3 months fell back markedly to 3% in May, which was the lowest level since April 2016. It was down from 13% in April, 16% in March and 24% in February. This is essentially in line with the long-term average of 4%. Output was reported to have grown in only 8 of the 17 subsectors in the 3 months to May, with the weakest performances coming from the chemicals, food, and drink and tobacco sectors. Price pressures essentially stable in May and still relatively elevated. The May survey pointed to price pressures being essentially stable in May for a second month running after falling back appreciably in March and February from a 34-year high in January. Despite coming well off January highs, price pressures are still above long-term levels. Specifically, the balance of manufacturers expecting to increase their domestic prices over the next 3 months edged up to 19% in May. It had previously fallen back to 18% in both April and March from 25% in February and a 34-year high of 40% in January. The balance is still markedly above the long-term average of 2%. The manufacturing sector lost momentum in first quarter of 2018. The latest hard data shows that manufacturing output edged down 0.1% month-on-month, meter per meter, in March, with the Office for National Statistics (ONS) reporting that there was little evidence that manufacturing activity was hit by much as severe weather. This followed a drop of 0.2% meter per meter in February, with March and February marking the first falls in manufacturing output since March 2017. This followed a flat performance in January. Prior to this, there had been 8 months of continuous expansion. The loss of momentum in manufacturing output was highly evident in growth slowing to 0.2% QQ in the first quarter of 2018 from 1.3% QQ in the fourth quarter of 2017 and 1.1% QQ in the third quarter. Manufacturing output was still up 2.5% year-on-year in the first quarter.